Hello, everybody. I think we'll make a start on this week's live stream. Hopefully, everything looks and sounds okay from where you are. I'm just making sure it's working. It appears to be working on YouTube. Clearly, it's been a strange week, a heck of a week, because of what's been happening with Ukraine and Russia. But just to explain, today, if you've never attended one of these before, it is a catch-up for the week so far, what's been going on, a look at the markets and a look ahead to where the opportunities might be this week. So we look at the major markets and also take any questions from markets that you want looking at as well. I think today will be a little bit different. I'm perhaps will end up spending less time on looking at markets you want to look at, and a bit more time talking about what's happened this week and the opportunities. It always feels a bit weird and perhaps distasteful to talk about, markets when there's clearly, a real conflict going on in the world. It does, I think, put it all in perspective. But we are where we are with markets, so we might spend a bit of time just talking about that, because we did see a massive turnaround yesterday. I mean, it's quite incredible, but more about that in a second. Let's do the risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Quick look ahead to next week, very quick look. Inflation data on Tuesday, factory gate inflation from China and USA. I mean, clearly before everything else happened this week, inflation and interest rates was a big focus, so that's, Tuesday could be interesting. Wednesday the 2nd, Canadian interest rate, which again is an interesting one. Interest rates, of course, tied in with inflation. What are the various central banks going to do to try and cap inflation? US Fed Beige Book, Wednesday night, which I think from memory is a report from the various Federal Reserve operations around the US and what business is like in their area. And the big one for Friday, or the big one that we know about, the scheduled economic event, is US non-farm payrolls, so the US unemployment numbers. I've got this quote I left in last week. I forgot to take it out. I thought it bears repeating, that I got from a trading blog the other week. Our minds have a natural tendency to associate complexity with sophistication, but in trading, simplicity is often your friend, complexity the enemy. I think it's well worth remembering that, given the sort of volatility that we've seen this week, that keeping things simple and managing the risk and all of that. But we'll talk a bit about this when we get into the markets. Of course, to find out more about the company, open an account, open a demo, go to the website, Capital.com. Any questions for me, drop me an email, david.jones@capital.com, at Jones the Markets on Twitter, and jonesthemarkets.com to find out a bit more about me. And of course, follow Capital.com on YouTube, Twitter and Facebook. For those of you who are watching now and are not subscribers, we do videos every week, about 3 videos a week on various different markets. The next one going out on Monday is trading volatile markets. We've thought about doing this obviously because of what's happened this week. So I think that would be an interesting one. I'm gonna start doing that over the weekend. We'll put it out Monday afternoon. So a strategy video will go out on Monday. If you're subscribed, clearly you'll get with the notification thing pushed. You get a notification off YouTube when our stuff goes live. So just make sure you're subscribed. Right, first of all, let's just talk about the swings we saw yesterday. Then we'll do our normal take a look at market stuff. So we did do an oil video yesterday. There's an oil video on the channel, and I recorded that about 7:30 yesterday morning. So it was in about here. I think it'd just been up to $98 oil. So I recorded it yesterday, and clearly we'd seen, if I flip this over to an hourly chart, when the news started breaking of this Russian invasion of Ukraine yesterday, I think it was at about 3 in the morning, something like that. Clearly you can see the oil price moving. You know, it had closed by the end of New York trading. It had closed around $92. And then early hours of the morning, my time, starts running higher. And then bang, 10 o'clock in the morning, trades up to, on our platform, $99.97. So I think I did say in the video yesterday, the big level to watch is $100. And it came within 3 cents of $100 a barrel. I mean, clearly the futures traded a bit higher. But then this move, look at this. I couldn't believe it. I got back a bit late last night and I looked at the markets. I could not believe it given up all those gains. There are some great lessons in there and we'll come to it in a minute. So the price of oil is trading back where it was before the invasion started. If we take a look at gold, I mean, the gold chart, you know, just looking at it, is absolutely hilarious. That gold has this run up, again, of course, early hours in the morning, starts to run, trades to 1974 from about $1,900 the day before. So all the gold bugs, I'm sure, going absolutely nuts and thinking, finally, we're going to see gold get a move on. And then completely reverses the move into last night. And actually, you know, last night and now is trading, well, pretty much at its lowest for the last few days. So some absolutely bizarre moves. And then finally, the S&P or the Nasdaq, whatever you want to look at, opens. Where's yesterday's trading? So, and I did wonder if this was going to happen, and I'll talk about it why in a second. You know, clearly it's an overnight market, 24-hour market. This is the early hours, my time. S&P absolutely falls off a cliff, as you'd expect. Even though, you know, clearly tensions had been building in the run-up to any invasion, it was perhaps not surprising that the market still reacted. But I did wonder, and it did actually happen, when US markets started trading, all day yesterday, the market recovered. I bet there are loads of people who got wrong-footed by what went on yesterday. And today, I think there's news broken in the last hour that Russian and Ukraine leaders potentially meeting in Belarus. So again, that's given the market a lift. Someone's just put in, how would you manage your risk in a situation like that, being highly in profit on oil, then it reverses? Well, if you're highly in profit in a market, you know, you move your stop up. That's what I do. You know, if the market had gone from, I mean, let's use oil as the example, then we'll talk a bit more about the specifics. You know, if you've bought, let's say you've been in oil from, I don't know, 89 and the market's trading at 99, you might want to think about moving your stop. Me, for getting out of trades and move the stop. When it comes to managing risk in general, I'll tell you how I manage risk when markets are doing this. I do absolutely nothing. The last trade I did was on Wednesday of this week. I won't be doing a trade today. I've got some other trades running that I've been running for a while, but I haven't tried to trade over this because the market has been nuts, is what I would say. You know, with how it's reacted and how it turned around so quickly. It's been an absolutely crazy market. And I think loads of people would have been really caught out by this. You know, in volatile markets, risk management is even more important than ever. You know, when we see it marched all the way up and marched all the way back down. I did say when I did the oil video yesterday morning, you can go and watch it, that for me, if I was sitting there watching it yesterday, the trade I would have been thinking about was, has the market overreacted? Has it just overshot? And I think in terms of risk versus reward, that was the trade. But when I was recording the video yesterday morning, the market was here, you know, so the thing was still going up. So for me, there wasn't a trade until it stopped going up. And I think perhaps it would have turned too quickly. But I do wonder, you know, if that was the trade. So there are three ways, I think, of trading markets like this. You know, if you wake up in the morning and the price of oil is up $5, if you are a novice, naive trader, you probably jump on it and hope for the best. And I know a lot of people did yesterday. I think in oil yesterday, we saw, I think I'm right in saying almost double the normal volume in oil that we'd seen as an average over the previous 5 days. So volatility brings people into markets, okay? And I think that's that. So if you're trading like that, you're quite reactive, and it can be. I mean, yesterday was the absolute perfect example. It can really teach you a lesson if your risk management isn't right. I think in gold we saw almost double the normal volumes in gold yesterday compared to the last 5 days. So I think the novice approach when we see a market explode up or down is to jump on and hope it carries on. But anybody trading on hope yesterday would have got their backside handed to them yesterday. The other thing to do is to go against the move, which ultimately would have worked yesterday, but the market turned around really quickly. So even if I'd have been watching it yesterday, I had to do some actual work yesterday. If I'd have been watching it yesterday, I think it would have turned too quick for me to think about going short. But that's obviously one way if we do see any more of these big moves in the weeks to come, try and think about it the other way around and think, is the market overreacted? And the other thing to do, which is perfectly sensible, do nothing. Do nothing. Wait for things to calm down. I think it's a misconception, again, I think, by novice traders that, days like that is what trading is all about. I hate days like that. I'd much rather have a nice, steady trend that doesn't suddenly jump up 6% and then dump 6% in a couple of hours. So for me, it's a really interesting couple of days. Let's hope there is some sort of resolution, diplomatic resolution to the situation in Ukraine. But I thought it was interesting how markets reacted. So what do we take from this? Have markets already factored in the Russian invasion of Ukraine? They reacted, and it feels like they've almost shrugged it off. And I think that is how it looks at the moment. If we look at the S&P, so the S&P is trading at 43.10 at the moment. So we're back up to where we were. What's the date today? The 25th. So we're back up to where we were Wednesday afternoon or Wednesday open on the S&P. Loads of volatility, loads of noise, but actually no real change. So I think it does make for an interesting setup next week. So let's... Actually, here's a good question. When you see such moves, do you later regret not getting in before? Well, yeah, but you could say that about any market, couldn't you? You could look at Bitcoin and say, okay, do you regret not buying Bitcoin at $5,000 when it's trading at $30,000? Yes, I do regret not buying Bitcoin at $5,000 when it's trading at $30,000, of course. But, you have to also be sensible. If you see a move like yesterday, what are the chances you'd catch it? What are the chances? You're probably more likely to get wrong-footed. I bet there was if you look at the European, when was the European session? So here, from about 6 in the morning till about 10, oil carried on going up. I bet there was an absolute bucket load of people who were buying in there thinking, well, that's it. Russia's invaded Ukraine, A plus B equals C, oil is going to $120 a barrel, for example. And they would have got absolutely clobbered in the afternoon. So, I think it was a horrible day for a lot of traders yesterday who were effectively, FOMO trading, fear of missing out trading. So, I think if you're not sure what to do, don't just do something, don't for the sake of doing it. Just because the market's gone crazy, don't do it. I did actually leave a trade yesterday on oil, so I put an order in to buy at 94. So I ended up buying crude oil yesterday on the way down on this account. But let's take a look. Let's take a look at oil now. Let's take some of the noise out of this and see where we are. We're still in the uptrend, okay? We go back. There's something wrong with my charts today. I'm not getting all the data today, but I think we're okay. I think I've got a bit of a slow connection. But let's look at where we are in oil. This trend is still up in oil. So taking the crazy volatility out, and oil has moved 10% both up and down in the last couple of days. Taking that out, we're still in a trend for oil. We're still in an uptrend. It was interesting, it couldn't quite crack $100 yesterday, but for me, I'd have to say, going with the trend, I'd still be a buyer. And maybe I'd be a buyer now on oil. I'm finding this really frustrating that it's not giving me all of my data. What's going on? Let me try hitting refresh. Hold on a second. I need all the data, man. Can't just work with a couple of days worth of data. Let's bring it up. There we go, that's better. Sort yourself out. So, you know, for oil, there's the trend since December last year. So for me, I mean, I bought at 94 yesterday because I left an order in. I would absolutely be a buyer now of oil. There we go. It's the perfect setup for me. Clearly, do not just follow this and blindly buy and then send me an email if oil's at $80 on Monday. Own your own mistakes. But I think it's interesting where it's pulled back to. You know, we've pulled back. We're trading now at 92 on oil. We've got lots of support running from 87. 18th of Feb lows. We've got support in at 90. 23rd of Feb lows. So I may actually have told a slight lie earlier on saying I wouldn't buy today, because I might actually, when I finish doing this, I might buy oil. But I think that's interesting. It's interesting that with all that volatility, we've come back to the trend. So perhaps we'll see some stability, and we'll see, for me, the target would be for a run back up to $100. But let's also bear in mind, the market shuts today for 2 days. A lot can happen over the weekend, diplomatically and militarily. So for me, if I was a buyer now, I'd normally be quite happy to hold over the weekend. Given what's going on at the moment, that perhaps would make me a little bit more nervous about holding over the weekend. Normally, I've got absolutely no problem holding overnight, holding over the weekend. Just bearing in mind clearly what's happened the last couple of days, an awful lot can happen over the weekend. And markets can be in a very different place on Sunday. So that might inject, I think, a bit of a note of caution, I think, for any of us at the moment. If you don't care, then you don't care, fair enough. But for me, the trend in oil is up. So for me, as long as it's stays above 87 to 90, that trend is up. So I'd be targeting a run up to $100 from here. Let's see what happens. Again, of course, but let's also bear in mind, charts are one thing, and clearly we've seen this week what actually goes on in the real world, if it's drastic enough, can have a big impact on the markets. But that's oil. Okay, so the trend for oil is still up. There is something a bit weird going on today, isn't there, with my charts? There we go. It doesn't. I'm going to get really frustrated in the moment. I'm not the most patient person at the best of times. Hang on, let's bring this up. What are we having a look at? We can have a look at gold now. So again, you know, lots of volatility in gold, but that trend that we've been watching since August last year, still up, but really overcooked up here. Yeah, let's take everything else out of the equation and just look at what the market's doing. You can see, I mean, that's an absolute lunatic candle yesterday, isn't it? Pretty overbought, you know, and I know in strong trends markets do go overbought. I do have an open position on gold. I think in this account, a couple of open positions running in gold. Where are they? Down here. So they're up about £400. I've got an open position for my own trade in gold as well. So I'm long gold, but I do think if I didn't have a trade on, would I be a buyer up here? Probably not. I think it's very interesting that, you know, gold is a classic safe haven destination in the times of trouble. And we've had a lot of clearly instability this week. It's not held on to the gains. So for me, I'd be much happier buying a dip. So for me, I think the risk for gold from here is a run back down towards $1,800. I did note that somebody said pure manipulation by COMEX. I mean, that's your opinion. COMEX is the gold futures exchange. There is, you know, fans of precious metals do have a bit of a hang-up about what goes on with so-called paper gold and paper silver. And I think you've got to put it to one side. You know, it's a market. It goes up, it goes down. You know, talking about manipulation, who cares? I don't believe it is manipulated. It's a big market, but I wouldn't get too hung up on crazy conspiracy theories when it comes to risking money. It's just my 2p's worth. So there we go. There's the price of gold. So I think it's a bit overcooked, basically, where we are now from where we have been. It wouldn't surprise me if we saw it under a bit of pressure next week. But for me, that's a buying opportunity into that overall bigger trend. So you know, the trends have not changed in gold and oil, based on what we've seen this week, even though we've seen massive volatility over the last couple of days. And the old silver, the most boring market in the world, silver, has had a bit of a run. And again, look at that move in silver yesterday. Let's see if we can flip this over to an hourly chart. Look at that. So silver went from, oh, now my mouse has given up. Oh, should we just call it a day today? What do you think? Okay, I think my mouse is working, but I can't actually see it on the screen. There we go, we're back. I think that's interesting. The move in silver yesterday from $24 to what, $25.50, and again, bang, all the way down. Again, for me, it looks a bit like oil in a way, that we've been slapped back down. I'd be tempted to give the trend one more chance. There's the question about holding it over the weekend. What could happen over the weekend? Potentially quite a lot, I would say. But I think it's interesting. You know, for me, if it was trading here on Monday around $24, I think it looks an interesting buy. You know, we've got support running from about 23.50, 23.60 and up. It doesn't change that bigger picture view for silver. It's pretty boring market, silver, still over the last year and a half. Lots of support down at 21.5. Really struggles, as it has yesterday, to hold on to it above $25. So let's see. I mean, for me, it's not a market I watch very much, but it was interesting yesterday, and I would suggest that trend is still just about holding on. So I wonder if we'll get a little blip up in silver again next week. Let's see. Let's take a look at some of the stock market, not the stock markets, the currencies. I'm going to start things off with the dollar index. You know, I know I say time and again, I think it's a great market to watch, the dollar index. Acted again as a safe haven destination yesterday. So we can see, again, the move in the dollar index. What time was it? From about here. It was moving higher anyway. Ran up to 97.60, given it back. But so again, for me, you know, the trend in the dollar index is still up. Nothing's working today. So for me, I would still be a buyer in weakness. They're really not happy, these charts today, are they? In the dollar index. Oh, flipping heck. 4 hours. There we go. So that's our dollar index trade since May of last year, or the dollar index chart since May of last year. It's been a really good trend, the dollar index, and I think if you want to watch a currency market, and you don't want to watch the pound and the euro and dollar yen and all of this stuff, just watch the dollar index, you know, because the dollar against a basket of different currencies. It's a really great trend it's had over, you can see, over the last, what is it now, 8 months or so. And that trend is still definitely up. But again, I think that perhaps we've got a bit overextended in the short term, and we could see a bit of a dip from here. But for me, I would still be a buyer of the dollar on weakness from where we are now. Let's see. Let's take a look at pound against the dollar and euro dollar. I mean, the pound got absolutely clobbered again yesterday on this, clearly, because you know, everyone's moving, well, not everyone, but people are moving to the US dollar as a less risky destination. Let's bring up the daily chart. Yeah, I will try closing it and reopening it in a minute. Thanks for that one suggestion. We'll give it a go if we get any more problems. I mean, again, really messy day. Pound against the dollar yesterday. It closed the day before, so midnight the day before, 135.40. Traded as low as 132.70. So what's that? 270-point move yesterday. I mean, I think I've said on a few occasions, I would like to be a seller of the pound. I just want to sell in a bit of strength. So I do wonder, because I've been watching that downtrend, and I think I've said even though the market broke out of the downtrend here and sold off, that we've still got lower highs and lower lows here. So for me, I still think I'd rather be a seller than a buyer, but not down here. And I actually should have sold at 136, but there you go. You know, shoulda, coulda. So for me, I wonder again, has the move been overdone? Perhaps we'll have a bit of a pound rally from here, but I think it's a difficult market to call when it's been trading sideways for 2 weeks, falls off a cliff, and then just has a day like today where it's doing nothing. So for me, I don't know, I suppose an aggressive trade is to be a buyer with a stop loss under yesterday's low, which is about 100 points away from where we are now, if you thought the market was going to rally a couple of 100 points from here. But I think there are probably easier, I'd never say easy, I'd say easier trades than that at the moment. So still wanting to watch. I've got a trade on euro dollar. I can't even remember. Oh, short euro dollar. Okay. I think I've had that for, I think we did a video on the euro. There we go, 10th of Feb, beginning of the month. So I have been short the euro since the beginning of the month. Clearly, I mean, I should have moved the stop yesterday, but for me, that trend on the euro is still down. So for me, even if we saw, euro strength from here into next week, let's say we get a couple of days where the market bounces back, I'd still want to be short, above 114. I think euro against the dollar needs to break 115 to suggest that this trend is reversing, this downtrend's reversing. So I still think the euro is under pressure. Clearly, again, fell off a cliff yesterday. So for me, I would rather sit on my hands, see if it bounces back and runs out of steam up there. Let's see what happens. But like I say, I don't really watch these too much during the week. What I watch is the dollar index, and I do think that is the market to watch. Okay, so there's our daily chart on the dollar index, and you can see the trend since May of last year. Right, we've done oil, gold, silver, currencies. Let's take a look at the cryptos. Crazy world of cryptos. So I did see quite a bit of crowing in the papers today, or in sort of various sites talking about how Bitcoin wasn't really proving to be a safe destination. I think it's a buy though, Bitcoin. I mean, it got hit yesterday, but I can't remember who I was talking to this week, but I do think it's an interesting buy down here. Again, using stop losses and everything else. And the reason I think it's interesting, I've said on numerous occasions, I think it's a market that teaches people bad habits, Bitcoin, because they assume that if they sit through the market declining by 50%, the thing will bounce back again, and there will be a point where it won't, and maybe we're at that point now. But the fact the market, Bitcoin, has gone from 69,000 in November down to 32 or something, 33 in Jan, rallies, breaks out of the downtrend and holds and has a little push higher briefly through these old highs from January, sells off, and we haven't taken out that old low, I'd be a buyer. So for me, if I was a buyer of Bitcoin now, I mean, clearly as a UK resident, you can't trade Bitcoin using leverage because it's not allowed by the regulator in the UK. But for me, be a buyer now, and I would put my stop, the closest I would put my stop, the other side of that low from January. So I think it's an interesting market, Bitcoin. Has it finally stopped the slide, the price of Bitcoin? So that's an interesting one. Let's have a look at Ethereum. This chart thing. Let me close the browser and see what happens. Okay, just bear with me a second, and let's see what I'm doing. I know I've completely lost what I'm doing, haven't I? Hold on a sec. I've got a live streaming thing over there. Hang on. Right, what were we going to look at? Ethereum, weren't we? Let's take a look at Ethereum. Oh, there you go, it's back. And Ethereum is interesting. I would say that, I mean, it's pretty similar to Bitcoin, isn't it? It's interesting that the low we saw in January for Ethereum, down at, what was it, 2150, so 2,150. The market yesterday traded down to 2,300. So it came within $150 of that low. And we've seen a bounce today. So again, for me, they would be a couple of markets that could be interesting next week, the cryptos. Are we seeing the decline finally coming to end? I think the Bitcoin chart looks more compelling than the Ethereum chart at the moment. But I think they're both interesting markets given the size of the decline we've seen since whenever it was, last November. And again, I would still trade them using stop losses. You know, I think people who trade without stop losses are idiots, in my opinion. I've heard some awful stories in the last couple of weeks about people racking up massive losses, being the wrong side of the Nasdaq and the wrong side of some of the energy markets like oil and natural gas. And if people had stop losses on their trade at the beginning, they wouldn't be in it. And the problem is, of course, if you have a loss, let's say you were planning on losing in your head 500 quid and suddenly you're down 1,000 quid and you think, well, when it comes back to being down only 500 quid, I'll get out. And then the market is 1,500 quid against you, and it really does compound it. So you absolutely have to manage the risk. Right, and finally, stock markets. Save the best till last. Actually haven't, because I think that oil and gold are both quite interesting markets. But it is interesting what we have seen in stock markets. So let's start off with my mouse is packed up, with the most important stock market to watch, the S&P 500. So, just to remind ourselves where we are, you know, we've had, of course, since March 2020, the big trends in the S&P. Really, I wouldn't say again easy market to trade last year, but easier than it has been this year, because we'd see sell-offs, the market would dip, and then we'd carry on higher, and everything was hunky-dory. This year, of course, much more volatility. And I thought this week was going to be a really interesting week, because coming into this week, the test was always going to be, how is the market going to react if it pushes back to January's low? So January's low was, 42.20 was January's low. And we closed, that was Wednesday's close, so pretty much closed right on the low on Wednesday. And I thought, well, Thursday would be interesting, and little did we know, of course, the invasion was going to happen overnight, and the market absolutely fell off a cliff. What's interesting is that it's massively reversed since yesterday's low, so I think it still doesn't really tell us that much, because it's been distorted by what happened, you know, with the invasion yesterday. Have we seen a low? I suppose a really aggressive trade now on the S&P would be to take the view the market has quickly rejected these lows down here, down at 4,100, and we're going to see a more gradual recovery. So it'd be a buyer with stops at the side of 4,100, which again is a big stop, but there is massive volatility out there. You know, it's only the other side of yesterday's low. For me, I still would be sitting on my hands when it comes to a directional trade on the S&P. I still think it's still hard to call. Are we about to enter a bear market for this year? Is this just a particularly massive correction from the highs? You know, I think it's tricky. So for me, if I flip it over to an hourly chart, you know, I would argue, actually, if there was a trade to do, to go short up here. Because this trend that's been in place since February, since the 10th of Feb, so we're, a couple of weeks into that, the trend's still down. So for me, perhaps that's the trade we do. Let's do that trade. And you could also argue, I mean, personally, I don't put any weight on what the RSI is doing. I know people like RSIs, that's why I have them up there. I never use them myself, but I do talk about them because I know people like the little squiggly lines. I think it's an interesting trade here. Okay, we've got the S&P pushed back up. You know, the S&P has rallied like a maniac over the last 24 hours. And we can have a bit of a rest. So for me, it's an interesting short up here. So what I would do, I'm going to put my stop the other side of these highs from earlier in the week. So 43.63. Let's say 43.70 is the stop. We're going to go short the S&P. So we'll put a stop loss. I apologise. This is actually my fault that I think my mouse is running out of batteries. So I keep having to switch it off and switch it on again. Okay, so 43.70 will sell 2. So I'm taking the view here, perhaps the bounce back's been overdone, and we could see perhaps particularly towards tonight's close, if people are a bit nervous going into the weekend, perhaps later on today we'll see the S&P under some pressure. But let's sell it anyway, and I'm putting a stop at 43.70, so above the highs for the week. That's it, let's go. Sell. So we're short the S&P at 42.91. I think that's an interesting trade to see what happens with the market the rest of the day. So for me, I am still not quite sure either way on stock markets. Have we seen an important base this week, or actually are we going to see further weakness? I don't know yet. I mean, the Nasdaq yesterday, the Nasdaq was one of the top performers yesterday. The Nasdaq actually ended up yesterday up about 3.5% from where it closed on Wednesday. So the Nasdaq had this massive turnaround. So again, loads of volatility. I mean, what was the swing was 1,000 points in the Nasdaq yesterday, pretty much 950 points from high to low in the Nasdaq. Absolute crazy market. But look at this trend. This is why, for me, I'm thinking like a lot of people, I've got pensions and investments and stuff like that, not just trading. For me, I'm sort of hanging back a bit at the moment about putting any more commitments into the Nasdaq and the S&P, because for me at least, that trend since January is still down in the Nasdaq. The market has gone from 16.5 to 13 yesterday. It's nearly a 20% move, isn't it? In not even 2 months. So for me, I want to see a bit more strength in the Nasdaq before being convinced we've seen a base. So I would say, I don't think we're out of the woods yet with stock markets. It's quite interesting. I think we've seen important lows yesterday with the sell-offs that we saw yesterday and the sharp bounce back off those lows. But, we've still got inflation and interest rates and everything else to worry about. So let's see what happens. Let's see what happens next week with the Nasdaq. But so for me, interesting markets to watch. Oil's an interesting market to watch because clearly it's going to be the one that reacts the quickest from where we are now, because we're back to that trend in oil, this important base in oil. So that's quite interesting. One to watch. Gold again, because these both been crazy volatile the last couple of days. So that's an interesting market to watch next week. And I do think perhaps we'll see these markets lifted a bit as next week gets underway. And the dollar index, because again, I'd still be a buyer of dips in the dollar index. And stock markets, very volatile, but really undecided. Let's see what happens. Right, what I'll do now, we'll go into the questions. So we've got about 25 minutes or so from questions. Don't forget to find out more. Oh, it always does this. To find out more about Capital.com, go to the website, Capital.com. Any questions after this, drop me an email, david.jones@capital.com. Follow me on Twitter, @JonesTheMarkets, jonesthemarkets.com to find out more about me. And of course, follow Capital.com on YouTube, Twitter, and Facebook. Right, let's just go and have a look at some of the questions. And then we'll have a look at the markets. Let's see. ARK. It's really interesting what's happened to ARK, isn't it? I mean, previously the absolute darling of US investors. Oh, it's not going to come up for me, is it? Come on, chart. So the ARK Innovation ETF. Hang on. ARK Innovation ETF. It's really annoying. It's bringing up the intraday chart, but it's not bringing up the daily chart. Right, hold on a second. I'm going to bring it up on something else. Just hold on a sec, because I think it's a great story of what's gone on in the US tech space, obviously. Here we go. Absolutely loved by US investors on the way up. It's famously run by Cathie Wood, is the lady behind the ARK investment company. Big investor in Tesla and the high-flying tech stocks. 2020 lows were $34. Touches $160 a year ago. Pretty much to the day, not quite to the day, but 16th of Feb, $160. And here we are down at 65. Massive slides. So what's that dropped? About 60% or so in a year. Another great lesson about taking stop losses, taking profits, managing your open trades, and thinking about, well, has this market turned? And for me, I mean, clearly it's lots of exposure to the Nasdaq. For me, that trend is still down. So I do have ARK in my watch list of things that I quite might want to buy, but I definitely don't want to buy them yet, because even the big trend off the highs is still down. Clearly, if we go back to November, when we saw the Nasdaq peak, that trend is down as well. So I think it gets a bit interesting if it can get up to 80. So it's one I definitely look at maybe once or twice a week. But for me, the trend in ARK is still down. So all a little bit crazy. My S&P 500 bounced back and went from making a loss to a profit in a matter of a few hours. Yeah, it was absolutely nuts yesterday. I mean, I don't remember volatility like yesterday. I'd have to go back to the financial crisis in 2008. I mean, clearly, with COVID, we had plenty of volatility when that started, but it didn't feel like we had volatility everywhere. I mean, yesterday, it was everywhere you looked. So JP Morgan, someone asked for. I think this is interesting, JP Morgan. So we've had, the trend since March 2020. The trend has been up. Again, for me, for me, the trend is up. So I'm looking to be a buyer still, even though it's fallen since November. So for me, an aggressive trade would be to be a buyer today, be an aggressive trade with a stop under 140. So for me, that would be the closest that I'd have my stop. Or maybe I wait a bit longer and see, do we continue to hold above this trend line? And a wider stop would be the other side of 127. So for me, I'd still be a buyer. But clearly if the broader market is going to suffer more, it'll probably get dragged down with that. But I think overall, the trend for JP Morgan still up for me. Evraz. Is Evraz one of the Russian companies? Mining company? Yeah, British operations mainly in Russia, but also in Ukraine. Okay. It's listed, isn't it? Is it listed in the UK? Yeah, it's listed in the UK. So clearly, a lot of the, I mean that price, that's been particularly hard hit, hasn't it? And who knows? Clearly it's a political question as well with some of these companies that are listed not in their domestic markets, but the stock's gone from £6 to £2 now. I mean, for me, I wouldn't be doing anything. I'd be wait to see if things calm down. So that's what I would do. It's the whole thing about not catching a falling knife and all of that. But given that so much is unknown at the moment geopolitically about some of these, the companies, it's interesting to see what happens. But personally, I wouldn't be risking my money. So let's see what happens. And I saw someone mention sanctions, and it's interesting, the whole sanctions on oil and gas. There's a film we've done that's going out next week, I think, on natural gas. And with oil and gas, if you apply sanctions, Russia supplies, I think it's 10% of world production for oil. And of course, the problem is if let's say the Europe and the US apply sanctions to Russia on oil, it's going to squeeze the price higher, as we saw yesterday. And if it squeezes the price higher, it's going to push inflation higher in Europe and the UK and the US, sorry. So they've got a problem, haven't they? So actually, by applying economic sanctions in this situation, there's the big potential that these countries are going to hurt themselves as well. So it's a right mess, I think, from an economic point of view. So who knows? Who knows what happens? Let's see. Let me carry on going through the questions. Tesla. Let's have a look at Tesla. What did they do? I mean, I'm guessing they would have opened lower and bounced back yesterday. Yes. Again, so for me on Tesla, even though it's broken below that trend, I might need to draw the trend like that. There we go. This is another one of my give it one last chance trades. So I often say, just because a trend line breaks, I wouldn't necessarily take the view the trend is definitely over. So I give it one last chance. But again, I'll probably wait for market volatility to calm down. I think it's interesting that the lows in September were about $700 and it spiked down to $700 yesterday. So if I absolutely had to do a trade on Tesla, I'd be a buyer, but I'd rather wait at the moment to see. But for me, I'd still probably rather be a buyer. I think if it starts breaking below 700, the risk is that perhaps we go and have a look back at these old lows down about 550 from March and May of last year. So again, with a lot of these tech stocks now, a very different picture to what we'd have had a year ago because things have rolled over. Currencies near Ukraine, for example, euro, Hungarian forint. Let's have a look. We do look at this one now and again, don't we? Euro, huff. Yeah, I suppose it's quite interesting that. Thanks for pointing that out. And it is interesting that clearly the Hungarian forint, they haven't invaded Hungary, but we're seeing euro strength against the forint. Again, I suppose there's some general nervousness. I was looking at euro ruble earlier today for somebody. If we have a look at that, clearly we did see, what we're seeing here is euro strength yesterday. Clearly moving out of the ruble, into a safer destination. It's calmed down, but a big swing, a 10% move at its peak yesterday. The euro gained against the ruble. What did dollar ruble look like? Then we'll get back to the questions. So dollar ruble, of course, it doesn't want to work today. So dollar ruble jumped 80 to 90. Yeah. So again, it's that about 12% yesterday, dollar ruble. And I think the trend has been up on the dollar against the ruble anyway. Not that we're going to be able to see it on that chart. So let's move on. Let's move swiftly on from that. Evraz, we looked at Evraz. Virgin Galactic, I think, is a bit of a joke stock, which is a bit, I think it's really interesting how it moves, Virgin Galactic, because when it has some news, when Mr. Branson did a test flight last July, wasn't it? We saw the stock jump really hard, so it gets lifted on news, and then nothing really happens. So for me, I've got absolutely no interest in it, to be honest, because I would say the trend is down. And okay, so it's $8, $8.70 or whatever now. So if you really absolutely wanted to be a bottom fisher, you're getting it, 70% cheaper than it was last August. So I suppose it's interesting, but it is one of these stocks. It's quite interesting to watch because it goes through periods where it does nothing and just drifts, and then something exciting happens with the space flight stuff, and it has a move. But for me, it's not a stock to trade for me personally. But let's see. So I think it's hard. It's hard to apply too much sensible analysis to that. But you can see clients who are in it like it. Look at it over here on the right-hand side. So 95% of clients who've got a trade on Virgin Galactic are long Virgin Galactic and only 5% are short. So they like it anyway. If buying oil for this weekend, you could use a guaranteed stop. That's a really good point, I always forget about guaranteed stop losses. So you're right, it's good, very good point. I don't even know how to place one. So if I bought oil, close at a loss, maybe I don't know if my account, I might be being really stupid here. My account might not be set up for guaranteed stop losses, but maybe we can't have guaranteed stops on oil at the moment. I don't know, but no, that's a good point. If you had the facility to have a guaranteed stop, it does completely take that risk away of the market gapping. So yeah, good idea. I won't be buying any more gold until it's back down at 1340. Wow. You are properly bearish on gold, aren't you? 1340. So you're saying it's got to go back to like a multi-year low, gold. Could happen. Oh, I just lost my place. Hang on a second. We looked at oil. We looked at oil at the beginning. Solana. Oh, I hate these. Is it a cryptocurrency? I'm not a fan of these crazy cryptocurrencies, to be honest. So the only crazy cryptos I look at are Bitcoin and Ethereum. I can't even say it. I mean, I would say that the trend in Solana is down. for me. So for me, you know, the risk is it's going to drift a bit more for me. So yeah, it's not one for me. But I'm not the biggest fan of some of the. I would say they're a bit obscure. I mean, but good luck with it if you're in it anyway. Okay, a crash is a buying opportunity, but I panicked. Well, that's it. See, a crash is. I think it's interesting because over recent years, let me just bring something else over. We've been really spoiled. We did a webinar thing with the FT and the Investors Chronicle this week, and talking about where markets are going. And I had one eye on this chart. This is the S&P. Look at that since 2009, right? We have been spoiled, I think, haven't we, as investors over recent years, or over the last 14 years, 13 years. Because we have had crashes, like here. Well, that's obviously coronavirus. But they've been really short-lived. So just gritting your teeth and buying has worked really well. We haven't had a proper bear market. I mean, clearly the financial crisis markets did sell off for about 18 months or so, 15, 16 months. And here in 2000, after the dot-com burst, to 2002, we had a sell-off. But we haven't really had, for 15 years or so, a really prolonged sell-off in stock markets. And there's no law that says markets have to go up every year or every 2 years. So that's why I am just a little bit nervous now. You know, could we have a proper bear market from here and we sell off for a couple of years? You know, I don't know. So you're right. Definitely over the last 14 years, crashes have been buying opportunities, but it doesn't necessarily mean it's going to stay that way all the time. But let's see. What's the difference between the S&P, the Nasdaq, and the Dow? From what I see, they move in the same direction. Now, it's a fair point. They're stock market indices, so they're made up of individual shares. They're just slightly different components. So the S&P 500, for example, is the top 500 shares in the US. The Nasdaq is the more tech biased shares. The Dow is 30 of the biggest blue chip shares. So they've got a slightly different makeup, but broadly speaking, they will move in similar ways. But if you Google Dow constituents, it will come up with, it'll show you the sort of companies that go into those shares. Since you traded the S&P with an hourly chart, how often will you check it and move your stop loss? Good question. For me, I would not move. If my stop loss is 50 points away, for example, I won't move it until it moves 50 points in my favour. So on a day like today, I might check it every hour. Normally I just set an alert if the market moves 50 points in my favour, bleep, so I can go move the stop loss. But I wouldn't sit there and watch it personally. I think it's losing money that short. I did on the S&P anyway, because I can see the market is back above 43.14. My mouse has died again. So I'm guessing, where's that short on the S&P? Down here. So it's currently losing. Yeah, so shorted at 91 and the market's 43.19. The stop is at 43.70. So it's still a distance away. Let's see what happens. S&P. Volkswagen short. It's interesting. I saw this week they said they were going to potentially spin off Porsche, didn't they, as a separate company? And I think Porsche is the most, or used to be famously, I think, the most profitable car company in the world. Probably because they charge you, I don't know, $2,500 for cup holders in your 911 or whatever. Short Volkswagen, I can't see it myself, to be honest. It looks a bit boring, Volkswagen, to me. I mean, great trend again off the lows. If I was going to go short Volkswagen, I'd want my stop somewhere above $200, but it looks a little bit boring. Unless you've got some inside information on the Volkswagen share price collapsing, it doesn't look like a compelling short to me. It just feels like it's been a bit sideways over the last 3 months, but let's see. Historically, the market does well during wars. Yesterday maybe was the bottom. It is an interesting point. There's the classic saying, buy on the sound of cannons is an old saying about stocks and wars. I think historically, I don't know how true it is, I don't know the stats, but that is one thing that people will take the view once the war breaks out. And we saw it a bit yesterday, I suppose. We had all the uncertainty for the last few weeks, and even though it is terrible that Russia have invaded Ukraine, at least the uncertainty is out of the way from a market's point of view. I mean, clearly it's, the markets pale into insignificance if you're living in Ukraine at the moment, but from a market point of view, it's happened. So, and I think that's one of the reasons we saw the market turn around. Can we open a CFD account in Australia? Don't know. Can you drop me an email? Drop me an email and see. I think we've got. I don't know if we've got an office in Australia. Send me an email and I'll try and figure it out. Can we have a look at Turkish Lira for a long-term trend? I mean, that was one of the crazy markets of last year, wasn't it? US dollar, Turkish Lira. It looks like it's calmed down a bit. I mean, for me, that's not a market I would touch at the moment. Because, again, I mean, it's gone from being pretty sideways, bit of a blip yesterday, I suppose, but pretty sideways. So for me, that's not an interesting market. Touched 18, went down to 10, and has sort of settled in the middle. So for me, it's not a market I would trade. I think it's the sort of market, if you put a trade on, at the moment, it feels like it would go nowhere for ages, and then you just have a massive move. And you just have to hope you're the right side of the move. So it's not an attractive market to me to trade. I've got a question. We could see higher prices on oil stocks like Eni or Gazprom if the crude oil continues to rally, or could we see some pressure on those? I think it's either or. Let's go with a more mainstream oil stock. Let's go with BP, for example. And clearly, it's not coming up again. Sorry about this. Let me drag something else across. So let's have a look at BP. I mean, clearly, these stocks have done well with a rising oil price. If we look at BP there we go. Since November 2020, BP's gone from 190 to 380. So it's doubled. It's doubled, isn't it? In a year and a half. The trend is still up. So I personally think stocks like BP have got higher to go because the trend in oil is still up. The only question is how much higher have they got to go, and I don't know the answer to that. So clearly, what is happening with the oil price is going to impact oil stocks, and you can see here on BP that trend is still up. So I am going to have to start trying to. I think because of the platform problems I'm having today, I am going to just wind things up. I think because I'm getting little bit annoyed that stuff isn't working right. But someone mentioned Archer Daniels Doodah. I used to follow this stock. I'm trying to think what they did. Archer Daniels Midland. What did they do? I've clicked off the chart now, so I'm sure I've jinxed it. Archer Daniels Midland. One of the world's largest agricultural processors and food ingredient providers. That was the other big movie yesterday, of course. We haven't looked at it. But the price of wheat and corn, I think, is Russia and Ukraine responsible for something like 30% of the world's wheat production, something like that. So massive volatility in agricultural markets as well yesterday. Anyway, Archer Daniels thingy. I think that the trend is still up on that one for me. Nice trend. So for me, I'd be a buyer. The only question is, where would I buy? Would I buy now at 77? I suppose an aggressive trade. We only saw it. It held up again. It held up really well yesterday. An aggressive trade would be a buyer at 77 with a stopper the other side of 73, which is yesterday's low, and see if it can break out to new highs again from here. Or the other thing is sit on your hands and see, do we get a deeper sell-off back to 68? But for me, the trade on that one would be a buy. It's just a question of whether I'd buy now or whether I'd wait for something of a sell-off and see. I think we are going to... Oh, thanks. Someone's explained to me how to set up a guaranteed stop. So thanks for that. You'd think I would know how to use the platform, don't you? After all this time. Oh, trading options. Thank you. So I could have set it up. Thanks for that. Someone has explained on there. Right, I'm going to wrap things up there. So sorry if we had a couple of technical glitches today. I hope you found the stuff on strategy interesting. You know, I would say if we do see ongoing volatility in these markets, just be careful, because if you jump in blindly, that's not a strategy. You know, you're just gambling if you're jumping in blindly. And if we do see, you know, something else politically or militarily happen next week and we see crazy moves in markets, you don't have to trade if you don't want to. You know, don't just trade because of FOMO, the fear of missing out. You know, me, I won't, you know, I didn't trade yesterday. I won't be trading today. And I'll see where things are on Monday. Don't forget to find out more, go to Capital.com. Any questions, david.jones@Capital.com, @JonesTheMarkets and JonesTheMarkets.com to find out a bit more about my trading approach. But you know, the obvious market to watch for me next week is crude oil and the price of gold. I think stock markets, I can't see a massive rally for stock markets from here. I think we're going to see lots of up and down days. And for me, the question is, are we going to see it move lower? You know, if someone said, where's the next 10% move in stock markets, I might be leaning towards it being down from here, whereas a year ago, it was just up and up and up and away. So there's lots to watch, but just be careful and manage the risk if we see these markets go crazy again. Right, we're going to wrap things up there. Thanks for coming along. Do it all again next Friday, I think. Payrolls next Friday. Interesting day next Friday. And then we've got that. I'll do that strategy video that goes out on Monday of this week. So make sure you're subscribed for that. Have a good weekend.